everyone, welcome to Morning Trade with Money Control. I'm Karunya Rao, and in the next half hour, we get you actionable trading strategies, sectoral trends, and most importantly, we'll be addressing your live queries. So let's start by taking a quick look at the global handover. European stocks advanced yesterday. Sentiment did see a rebound from a broad sell-off in the recent past. Key indices, Stoxx 600, DAX, FTSE, they were all up anywhere between 0.5 to 1.2%. Some relief on the Wall Street too, with the S&P and Nasdaq closing in the green, but Dow fell for a fourth consecutive day. Stocks in Asia trading mixed as investors digest the higher than expected Chinese inflation data for April. SGX Nifty indicates a tepid start for D Street. Lots of mid and small cap earnings lined up today. So we'll discuss Relaxo, PNB, Adani Ports, Petronet LNG, Chola Finance and several other names on the show today. We also get you the details on Delhivery IPO and focus on logistics and transportation sector with an expert. But first, here's all you need to know about the upcoming IPO of Delhivery. So let's talk about what's trending, the Delhivery IPO, and why is it trending? Well, there are several reasons why. It's a logistics and supply chain startup, essentially India's largest company by revenue when it comes to the logistics space. It's all set to go public. It has built a network covering every state, servicing about 17,045 PIN codes in India. The logistics and supply chain startup became a unicorn when it raised $413 million in a Series F round, which was led by SoftBank Vision Fund back in 2019. Let's get you some details about the IPO as well. Now, first up, the company, do remember, it has cut the size of the IPO to 5,235 crores from 7,460 crores. That was the decided amount earlier. Now, the company's IPO will open on 11th of May. That's today. It will be open till Friday, the 13th of May. Its shares have fallen about 40% in unlisted market from the peak of 950 rupees a piece. Now, that's something that we're picking up on Money Control at 550 to 600 rupees on thin trading volumes right now, according to dealers. That's where it's perched at. Meanwhile, the company has never reported a profit. Now, that's a big headliner that you also should keep on your watch list. It's reported a loss of 891 crores for the 9-month period of FY21. Negative free cash flow of about 246 crores was reported in FY21 versus 848 crores in FY20. Now, let's talk about the valuations that it's demanding, about 5.5x price to sales. The combined market cap of TCI Express, Blue Dart, Gati, VRL Logistics and Mahindra Logistics, all of these listed players' market cap combined is likely to be less than the expected market cap of Delhivery, which is going to be around 35,000 crores. So why are the valuations so high is something that even the analysts seem to be questioning at this juncture. Let's see. Today is when the IPO will open, so we'll have to see how the response will be once it closes, and all eyes will be on the listing. But let's talk more in detail about what's happening in the logistics space, and for that we have Depesh Kashyap joining us from Equirus. Depesh, good morning and thank you for tuning in. Now, if we look at the tailwinds playing out for logistics segment, there are two things that are working in its favor. First is GST, which is driving very solid gains when it comes to organized players. And the second one being the commissioning of dedicated freight corridor, which is going to help accelerate a shift from road to rail traffic. So, as these two triggers are playing out, tell us, how is the logistics sector looking at this juncture amid all the macro headwinds as well that we're facing?
Hi, good morning. Thanks for having me on the show. As you rightly said, logistics sector has seen a lot of change over the last few years. If you look at the overall logistics sector, it's estimated to be around $200 billion and is expected to grow at around 8 to 9% in line with the real GDP growth rate of India. Having said that, there are certain niche spaces like express logistics in the B2B and the B2C space, and then there are 3PL and supply chain companies which are expected to grow faster. Now, if you look at the overall, the sector is dealing with a lot of inefficiency in the place. The model mix, once you talked about, right, there's a lot of, the model mix is skewed towards the road. That is like a lot of, adding to a lot of cost. Then also the market is largely unorganized and deeply fragmented. If you look at overall, 85% of fleet owners in India have less than 20 trucks. And if you speak about the warehousing space, 90% of the warehousing space in India is mainly with the smaller warehouses, which are less than 10,000 square feet. So overall, the share of organized players is like less than 3 to 4%, so to say. And that is expected to grow in a very, very meaningful way over the next few years. Now, having said that, last few years since the COVID has come, the lockdowns happened, the importance of the logistics sector increased, and the share of organized players have actually increased over the last 1.5 to 2 years. Now, that has basically led to a very sharp growth of some of the listed companies that we have seen. And I think, yeah, that is how basically the sector is looking at. Now, everybody thinks about the logistics in place. The companies are outsourcing more of the logistic work that they used to do in-house now to the more your specialist supply chain companies. So that trend is improving. If you look at the overall penetration of the supply chain 3PL industry in India, is just around 4.5%, whereas in the developed countries it is around 15 to 20%. So overall, that supply chain sector has to grow if India has to reduce overall logistic cost, which is around 13-14% as a percent of GDP right now. So yes, the sector is pretty interesting, and things have been moving forward in the last few years, helped by the government moves, especially when you talk about GST, e-way bill. Yes, that has really helped. And then the DFC corridor, which has been commercialized last year, that has led to a meaningful shift towards rail that we have seen over the last 1 year. Having said that, there's also the road is also grappling with some issues of the high diesel prices and all. So in the coming time, we'll actually come to know how basically the actual shift has happened. But yes, the things have been moving in place.
Okay. All right. But, I was just flagging off to our viewers while talking about the Delhivery IPO that it's likely to command a higher market cap than all of the existing listed players combined, the likes of TCI, Gati, Blue Dart, VRL Logistics, etc. And analysts are a bit concerned about its valuations as well. Now, I'm not going to ask you specifically about Delhivery IPO, but talk to us about the valuations in the logistics and supply chain space. Do you like the current levels after the correction that has happened across the market? Should one look at investing right now, or should one wait for further clarity on the macros, whether it's supply chain related bottlenecks or whether it's high fuel prices?
So macros we can never forecast perfectly, so that is not our forte. But we should, as I told you, that there's a lot of underlying movement towards the organized sector. So that is what basically is driving the growth that we are seeing in the logistic companies. Having said that, the valuations of the companies saw a recent uptrend over the last 1 year, but due to the recent market correction of the last couple of weeks, the stocks have corrected, and some of the stocks are trading at a decent valuation. Also, we have to look at basically which companies cater to which sectors. Now, most of the companies in India cater to automotive sector. Automotive sector has been under problem for the last 1 year or so, and that is why some of the companies which have a very high auto sector exposure, they have actually trading at a very decent kind of multiples right now. Otherwise, those are the companies which we can actually look at if the auto sector is expected to turn over the next 1 year. Those companies can give a meaningful return. Having said that, when you talk about the valuation, you should also look at the growth rate of the companies. There are certain companies which have a higher exposure to the B2C segment, and most of the listed companies in India are basically catering to the B2B side, right? So they are actually not comparable. In the B2C side, the e-com boom that we have seen over the last many years, right? So the e-commerce shipments, if you see, were around 0.5 billion few years back. Right now, they are 2 billion. They're expected to become around 9 billion in the coming by FY26. That's what the industry reports say. So if that kind of growth is happening, basically the B2C players will see a very sharp growth, which they have been seeing over the last few years. So expect, and according to the growth rate that I expected, the valuations are also in tune with that. So you have to be very stock specific. You have to look at what sectors they get into, which basically how much the growth is expected from that particular company, and then basically look at the valuations. But yes, if you look at the global companies, the companies which trade in these niche segments and are growing at a very fast pace, we have seen that they grow at a decent EV by sales of around 3 to 5x. So that is how it is. And then also you should also look at the per unit economics of the companies on a per parcel basis, how much money they are making. If they are making money on a per parcel basis, then I think the life is sorted. And then basically as the scale increases, then the fixed cost, basically there will be a significant operating leverage in play. And then the EBITDA margins can actually look very different in years to come. So valuations, yes, but growth rates and the sectors that they're exposed to should be also looked at in a meaningful way.
All right. Thank you so much, Depesh, then, for joining in early in the morning, helping us understand the big trends playing out in the logistics and supply chain space. But let's talk technicals. Rahul Sharma of JM Financial is with us. Good morning, Rahul, and thanks for joining us.
Good morning, Karunya. Thanks for having me on
We
the
were
show.
just talking about the logistics sector and we have a lot of questions coming in. So before we talk about the trade setup, let me quickly address one quick question. This is from Jami Prashant and he wants to know if it's the right time to enter Snowman Logistics. The stock is near a 52-week low and if he can potentially make a profit of 10 to 20%, he'd like to enter. Rahul, Snowman was a very talked about, a very happening stock of the lockdown period during 2020. It saw a phenomenal uptick. But yes, like many other mid and small cap names, Snowman has also been languishing this year. So talk to us about your view and your advice to our viewer.
Yeah, so technically speaking, Snowman has been in a painful grind, especially once it broke its 1 year 200-day moving averages. And overall, there is underperformance in the stock. But the good thing is the stock is still above its March lows, and the current sell-off has actually held on pretty well. The stock coming off from around 40 odd levels to 34 currently. So I believe that as long as it is above the 30 rupee mark, which is the previous consolidation area, which happened in March, I think the setup would remain neutral as of now. I think for the setup to remain to turn positive or bullish from the current neutral would be above the 40 mark. So from a medium term perspective, we believe that 30 as a base, as a closing basis, you can have a stop loss for this stock and hold on to it for an immediate target of like 40 rupees, possibly in the next month or so. But if it crosses above 40, I think then things we can expect some sort of a turnaround where the long-term structure of the chart would change and we would see more upside coming in. So still it is early days, but I think as long as it is above the March consolidation period, the stock would be, whenever the market rebounds and whenever we see a recovery broadly in the small cap and the mid cap segment, we should see a turnaround in Snowman as well.
Okay. All right, so let's shift gears and talk about how the Indian markets look right now. We've seen a mixed trade on Asian bourses earlier in the day. Wall Street again, mixed handover. Right now, the SGX Nifty, it's looking quiet, but it's below 16,200 levels. What should we brace ourselves for today?
So, if you are a day trader, the volatility is gut wrenching. That is the word. We've seen, Nifty turning, 100 points in a matter of minutes. And broadly, there are two sides of the spectrum. One is markets are heavily oversold. And in such a oversold area, to exactly sort of, market trying to find a reason for a reversal is possibly the inflation numbers which are scheduled today. Today's data could be a make or break day for the market. On one side you have an extremely short bias from the FIs on the index futures. They have a long short ratio of around 23%. On the other side you have global markets which have broken down, especially the US markets. In fact, Dow Jones, Nasdaq, and S&P 500 have broken their March lows. So technically speaking, we are slightly behind the curve, and if we were to break the March lows, we would very well be headed towards the 15,500 mark. So barring today's, if there is a positive surprise from the US inflation numbers, we could see a relief rally. We could see the Nifty bouncing back sharply from here because it is heavily oversold. But overall structure remains bearish as long as we are below the 16,830 mark, which is the 200-day exponential moving average. So, it is a classic sell on rise kind of a market. There are, they have its own challenges. Broadly, as long as, this average is not navigated broadly, if as long as, we don't see any structural rebound happening in the global cues, which is US markets and European markets alike, I think it will be a painful sort of a spiral down. So positionally, we are expecting 15,500 on the Nifty. Today, in case the numbers turn out to be positive, there could be a relief rally. But we believe that in case you are stuck in long position, look to exit these long positions around the 16,700, 16,750 mark. And in fact, puts can be bought on a position basis for the monthly expiry of 16,000 strike price. You can buy it as a hedge against your portfolio, or simply participate by buying these put options and trade on the downside. So, as of now, considering the overall derivative setup of the market, considering the market breadth, and considering the way small caps and mid caps, which were relatively better placed until now, the way they have gotten hammered in the last few sessions, indicating that the risk appetite of the market is slowly and gradually coming off. So, this is, broadly the way we see markets at this point in time.
Okay, Rahul. Lots of questions coming your way. Our viewers are sending us back-to-back queries. Happiest Minds is something we'd like to address. Santosh is wanting to know your view over the long term. It's a relatively new stock. Right now, down by almost 30% year to date. 955, a good level to enter or better to stay away?
So, this stock had its fair share of, success in terms of, the stock multiplying, many times during the previous rally that we had. Now, simple Fibonacci retracements, if we take, of the entire rally, which started in Feb 21, around the 350 mark, it rallied up to 650, 1600 almost. The Fibonacci retracement of, 50% is coming around the 960 mark. Whereas the 60% retracement is coming around the 820 mark. So right now what is happening is it is consolidating around the 50% retracement of the previous rally. So as long as we are above the 820 mark, which is the 61.8% retracement, I believe that the overall structural strength of the stock would remain. And overall, we've seen that IT stocks have seen relative outperformance given the weakness in rupee as well. So at least, the sector is not falling, more from here. And at the same time, if the stock consolidates and, as a stop loss, in case you have a position or wish to take it, the best thing to do is, have a stop loss at somewhere around the 920 mark and hold on to your position. We made this low around March, in the first week of March. So 920 can be a stop loss for long positions. And overall, in case if you're holding it in your portfolio, 820 is the major Fibonacci level which can be kept in mind. In case any trend reversal has to happen, this level, in case if it gets broken, would dampen the overall structure. So as long as we are above that, I think long-term structure of the stock remains positive. And for the short-term traders, there would be more action seen once the 50-day moving average, which is around the 1060 mark. I think if that gets taken out, we should see some decent upside coming, some more upside coming into the stock as well. So, yeah.
Okay. What about IEX? Kamalaja R has written to us whether it's a good time to buy. IEX is something that they want to know. From 295, 300 levels, back in December, the stock has off almost 100 rupees. Trading at around 196, 197 rupees, just about that level. Do you think right now is a good time to perhaps lap it up?
Yeah, so, in terms of risk reward, the stock is, very fairly priced in terms of, it's very close to its support levels. And in fact, these are crucial support levels. The support area, like in March also, we saw the stock reversing from 192 mark. This time around also the stock has taken support just above that level. And, clearly from a risk reward perspective, this seems like the stock is, fairly placed, with a 192 stop loss. We can very well expect the stock to, give a bounce back along with the broader market. So, 220 is something that we are eyeing on the upside. And in case Nifty does not break the 16,000 mark, in the next few days, we could very well see, this stock bouncing back from these, heavily oversold territory. So for a trader, it's best to, have a long position over here. With a 5 rupee risk, if the view goes right, there is a good, risk reward to be had. Around 20 rupees on the upside can be easily had. So from a trading perspective, you can look to add. Probably, from a medium-term perspective, we need more clarity as to, whether the stock holds out higher levels or not.
Okay, all right. Palani Kumar is writing to us right now. He wants to know about L&T and Wipro and whether now is a good time to buy. So both of them heavyweight companies, but yes, they have been mired a tad because of the overall market weakness. What is your advice to Palani?
Yeah, so, speaking of Wipro first, so what is happening is, we'll have to look for clues in what is happening in the IT index. So the IT index, was the first one to, go down, even ahead of the market. And now, it has reached a crucial juncture, where it is helped by, tailwinds from the weakening rupee. And, especially the large cap heavyweights have seen some buying happening in the last few sessions. So, clearly from, the index perspective, it is in oversold territory. If you see, simply track the RSI, which is a momentum indicator, there is a divergence which is happening, a bullish divergence which is happening So the index is set for a bounce back. Now coming to what is happening in Wipro, hasn't really sort of, seen this, similar consolidation what an Infosys or, probably a TCS has seen. In fact, it has kept on going, lower. But, the silver lining is, in terms of levels, yesterday's low, which is around 475. In case if that gets honored for a couple of days, even this is at a juncture where a bounce back can, easily take the stock to around 500, 510 odd levels. So, clearly this is a bounce back trade. There are better picks, to be had in the IT space. Like, Infosys remains our top pick as far as, there is, weakness in the USD INR pair, which today, at least avoid trading for the day to day, because what can happen is the inflation numbers in the US are lesser than the expectation of 8.1%. We could see a rebound happening in the USD INR pair as well, where, we can see a pullback below 77 levels. So probably once today's event is navigated, IT can be touched upon. And as far as Larsen and Toubro is concerned, this is again, one of those stocks which has come back to its March lows. And there is a possibility that, we may have a double bottom over here. This is a make or break level for L&T because it is also on the verge of a death crossover. So death crossover is when the 50-day moving average crosses the 200-day moving average, from top to from the upside to the downside. And in case the March low of 1595 gets broken on this, we may see, the death crossover happening on this, and, there may be further pain. So, probably, this is also a make or break stock. Have a tight stop loss at 1595, and, if the market bounces back, this could very well see a bounce back up to 1675, 1700, like on an immediate basis. And, probably from there, we'll have to see how, Globe is placed and how, because this is an index stock that also, would play a big role in terms of, how the Nifty is placed from there.
Right. Okay, we have just a couple of minutes for a quick query on IRCTC. Sudhakar is writing to us live on our YouTube feed. IRCTC has had a phenomenal year, almost 89-90% gains in the last 1 year. But last 6 months have been very turbulent. What would be your view here?
Yeah, so below 710, the bias remains bearish in IRCTC.
Okay.
Clearly, the stock has broken down its 200-day moving average. The stock is facing a lot of heat in terms of what we generally look for is our volumes expanding at major crucial support levels. So as of now, that is not happening. So as long as it is below the 710 mark, the bias remains bearish. On the downside, we could very well see the stock slowly, gradually grinding towards the 600 rupee mark. So, in case, you have your position, keep a tight stop loss, at 670. And in case that gets broken, do not hold on to this stock on the long side.
Okay. All right. But Rahul, right now, all of the stocks that we're talking about, they've been down and out, many of them at least. But talk to us about what are the stocks that you are eyeing closely and what are your calls? Anything you'd like to share with our audience?
Yeah, so, we are closely tracking, on the banking space. Kotak Bank is something that we like in particular. The stock has shown extreme resilience and, it continues to trade about 50-day moving average. In fact, there is clear divergence. In spite of the weakness in Bank Nifty, the stock hasn't really gone down. The results were, relatively better as compared to most of the private banks. And we believe that, there is a good upside to be had on Kotak Bank. So, for a target of around 1900, this can be bought with a 1750 stop loss. And, we believe that, this stock has, the strength of this stock is a relatively much better place. Another idea that we're liking on the short side is ONGC. So, ONGC is, closely tracking what is happening on the Brent oil. And, the way Brent oil is placed, it seems like, there could be further slide possible. 95 on the downside is the lowest, is the support area for Brent oil. In case that gets broken, we should see further, collapse coming on the Brent oil as well. So, I think, it can be shorted with a stop loss at say 160. And on the downside, we are expecting like a 145 kind of a level on ONGC. So one long and one short, I think that's the best way to approach this kind of a market. There are headwinds on ONGC because of, the fall in crude oil prices. Whereas Kotak Bank is something which is relatively held off the entire banking space in a much better way. So in case there is a bounce back, we expect, Kotak Bank to outperform. In case the markets were to break down and, crude were to break down, we see that, ONGC can be a dragger on the downside.
Okay then. Rahul, it's been a pleasure chatting with you, and thank you so much for joining us, helping our viewers out and sharing your view on the market, the indices, and a host of stocks to watch out for. That's all we have in this edition of Morning Trade. Stay tuned. Markets with Santo and CJ coming right up on Money Control.